Hey, what's up, my friend? Welcome back to another week of our weekly market analysis. But this week is not really a market analysis, but rather it's all about Johnny, right? So who is Johnny? So just a brief run through, right? So Johnny is just one of the subscribers who just messaged me recently, right? I have no idea whether Johnny is a girl or boy. I just call him Johnny since I want to protect his or her identity, so I don't mention the real name, so I just call it Johnny. So Johnny basically made 13R on a recent trade that he took recently. So it's a trade that I mentioned about 2 months ago, right? About this particular trading setup on soybean that I believe that it has room to really explode higher. So and it really did, and Johnny caught a big part of the move. So this is a trade that Johnny took that actually resulted in 13R in profits. So what is 13R? Alright, I'll explain it in more details later, but basically 13R means that you made a return of 13 times your initial risk. So if you put in $1 to risk, you make $13 back. You put in $100, you get back $1,300. If you put in $1,000, you get back $13,000. So that is what 13R means. So I'm going to explain to you in this week's video how Johnny took this trading setup, what is the exact trading setup that Johnny took, and how he can actually, replicate this kind of a trading, I would say, scenario in the future days ahead. So all this and more in this week's market analysis. I'll see you there. Okie dokie. So this is the email that I got from one of the subscriber. Let's call him Johnny. Of course, Johnny isn't his real name, right? He said that, "Hi Rayner, I took notice of the soybean trade from your previous video and I went long on it. Got out yesterday and pocketed about 13R. Thank you for posting the video. It was his first trade. Got out because price approached the resistance at $11. Now waiting for the opportunity to get long once again. And you should start to charge money for all your efforts in making those videos." Okay, that's interesting. So that's it. Let's get back to this email, right? I like the fact that Johnny mentioned his profitability in terms of R. Right? I think R is a very objective measure in terms of measuring P&L. Because often I see traders, he will tell me, "Oh, Rayner, I made 20% on this trade." I'm like, okay, fine, you make 20%, that's good, right? But what is your initial risk on that trade? And they say, "Oh, I risked 40%. So if you risk 40% and you made 20%, basically that's a risk to reward profile of 0.5, right? Because for every dollar you're risking, you make 50 cents. And it's the same for this percentage terms as well. You risk 40%, you make 20%. Basically, your risk to reward profile is 0.5. And in terms of R is 0.5 R. And same for talking in terms of pips. He's telling me, "Rayner, I made 500 pips on this trade." Well, it sounds like a lot of money. It sounds like, really awesome. And then I ask, "What's your initial risk?" "Oh, I risked 2,000 pips. And then again, in terms of R, it's only 0.25. How do I get 0.25? You just take your reward, which is 2,000, divided by 500, which is your initial risk. You're going to get 0.25 R. So I think R is a much more objective measure because it tells you and it tells traders around you what is the risk you took to attain the reward. So let's say that you had a 4R winning trade. This tells me that you risk $1 and make $4, right? I know what is the risk that was involved. This also means that if you risk 1% on that trade, you made basically 4% as the outcome. And if you risk 2%, right, the outcome you made is 8%. It's all a multiple of 4, right? So I think R is definitely a much more objective measure in measuring a trader's performance, right? Talking in terms of dollars, talking in terms of percentage, talking in terms of pips or ticks is pretty much, I think, irrelevant to me. Okay? So Johnny mentioned in terms of R, and I'm really happy that he talked about his performance in terms of R. Okay, so now for those of you who are interested, right, this is actually the video that Johnny is talking about. This is the one that I posted back. Okay, that's 2 months ago. Wow, okay. So signs of accumulation in this market, I believe that was the soybean trade that he took, and it's actually based on watching this video, right? So for those of you who want to learn more, let's talk about this, right? This is actually the soybean chart that I was talking in that video, I believe. So I said that, soybean is a market that has actually fallen, 50% or more over the last few years. If you look through at that high over here and back to these lows over here, I think it has fallen about 50% over the last few years. So what actually piqued my interest is that I saw this range over here, right? The market starts to go into a range. And you know that, trends, they move in a transition, right? From a trending market to a range market, back to a trend market as well. It doesn't really go up, come all the way back down, and then bottom and then reverse all the way back up again. Usually what happens, right, more often than not, is that the price goes up, starts to consolidate, then it breaks all the way down, right, in the depression mode, then it starts to consolidate for a long period before it breaks up higher again. So that's usually how the market moves in cycle. But I don't deny there are times where it just, does a V-shaped bottom, right, or this kind of, reversal top as well, right? This happens, but most of the time I'll say this is a more common scenario. Okay, so that's it. And in this instance, right, I was thinking about the soybean trade and I saw this potential accumulation phase over here. So let's have a look in more details, how the market looks like. So it was looking something like this, right? This soybean, right? So this is a zoom in view, and I was seeing that the market is actually being respected. It's actually contained between these highs, right, the resistance, and this low, the support. So my plan, right, or I shared in the video, is that if price were to be able to break and close above this area of resistance, right, if you can do it, I'll be looking to get long. So I believe this was what Johnny saw and he heard, and I believe he went long as well. So you can see that when price break and close above this resistance area over here, Johnny went long, right? I'm not sure where he put his stop loss because he didn't really mention it, but I believe it should be pretty tight because he got 13R out of this trade. So basically, Johnny went long and he really managed his trade really well. He decided to ride with the trend. So you can see the price went in his favor, and pretty smooth trade as price moved in his favor very quickly, right? There is this spike down lower, which he didn't bail out and still hold on, right? That's a good thing because it shows that he has patience, and he just ride the move all the way up, back to, I think, since close on Friday, I believe it's somewhere here. This is where he exited. And he said that he exited because it is coming towards this area of resistance, which you see over here. And yeah, he exited this trade, profit of 13R on this soybean trade. So I'm really happy for him, right? Because it really tells me that he has the patience to ride this entire move. And now, my role as a how do you call it? I don't really want to use the word educator, but my role as someone who, shares about my trading experience is that, I don't want you to take away watching this video and start to spot these patterns and thinking, the next winner is just around the corner. Because the truth is, for every kind of trading setups like this that you see, more often than not, there will be more losers than winners, right? I'm sorry to dash your hopes, sorry to dash your dreams, but I'm telling you, right, most of the time you'll be facing losers, right? Because you are a trend follower. I mean, at least, this approach is trend following. You're trying to ride the trend for all it's worth. And most of the time, the breakout is going to be a false breakout and, you just suffer a small loss. But one time like this, right, this kind of move is going to repay back all the little losses that you have accumulated along the way. So I don't want you to, go back and think, oh man, this is the, secret trading technique, right? This is the one that's going to make the big money, right? 13 times my initial risk. Wow, 1% I make 13%. If 10% I make 130%. Come on, right? Hold your horses, right? That is not going to happen, right? And now let me bring you back to reality, right? Let me share with you another similar trading setup, the Aussie Sing. Aussie Sing, again, similar thing, right? You have lower highs and lower lows, and price come into this period of consolidation. And then looking at the charts, it looks something like this, right? So again, same setup, right? You can identify the highs, identify the lows, and then you go long on a breakout, right? Price broke out above resistance, you go long. And then what happened next? Price start to hover around it and smash lower, right? So you got stopped out of this trade, right? So more often than not, right, you will get stopped out for a loss, right? It's not going to be a big loss because you are just risking, a fraction of your trading account. I typically, advocate risking 1%. So usually you just lose 1% the most, or if you exit earlier, you can just risk, you can lose 0.5 or 0.6%. But this is another scenario that's going to happen, right? It does not mean that all breakouts are going to work out. Okay, you have to understand that trading is all a game of probabilities. Some trades are going to be massive, huge winners. Some trades are going to be losers. And some trades are just going to be, pretty much break even or just small winners. And the key thing is this, right? The key thing is this. The key thing is you don't know, right? You have absolutely no idea, right? Nothing, zero. You don't know what's going to happen. Right? You don't know which trades are going to be winner and you don't know which trades are going to be loser. Face it, admit it, right? Let it sink that into your head. And the fact that you admit that you don't know what's going to happen, you're going to do two things. Number one, you're going to have a stop loss. Right? Repeat after me. Number one, I am going to have a stop loss on every trade. Right? Because I don't know what's going to happen next. Number two, I am going to risk a fraction of my trading account. Because I don't want to suffer the risk of ruin. I don't want to blow up my trading account. So I'm going to risk a fraction, right? Rayner, advocate 1%. So if you do these two things, right, it is a good thing. Because you will protect yourself. right? When the drawdown come, you know it's not going to take you off the game. And when the big winner come, for example, the soybean trade that I just mentioned to you, right, the one that Johnny took, he made 13R. That is the one that's going to pay for his entire, I don't know, months or year. Right? Imagine that one trade, 13R. What does it mean? It means that he can have the next 12 losers in a row, and he's still going to be a profitable trader. Think about this. How powerful is that? You can have the next 12 losers, and you're still profitable. Right? And this is the beauty of trend following, right? You don't have to be right all the time. You don't even have to be right half the time. In fact, right, you can just be right about 40%, 35% of the time. You will still be a profitable trader. And the only way that you can actually, survive and last in the long run is to admit that you don't know what's going to happen on the next trade. You don't know what's the result going to be. Whether it's going to be a winner or loser, you don't know. And the fact that you admit that you don't know, you always have a stop loss in place and you risk a fraction of your trading account. Okay? Okay, so I hope I managed to drill some important lessons into you. Alright, I don't want you to think that Rayner shared this pattern and the next time I spot this pattern is going to be a huge winner. Right? I don't want you to be disappointed, right? Because chances are the next pattern that you spot that looks like this is most probably a loser. Okay? So bear this in mind, right? I think Johnny did a great job and capturing a trend. Really happy for him that he understood what trend following is all about. And I hope, for those of you who also caught this move, right, I'm happy for you. For those of you who missed it, don't worry, right? There's always opportunities around the corner, right? But the thing is that before you can catch the next move, you want to have enough capital to preserve your capital before that chance occur, right? You don't lose everything, right? Where you lose all your entire account and you have no more stake to play with, right? That is, I can't help you with that if you have no money, right? There's no money, you can't trade anymore. Okay? So yeah, talk until I know a little bit out of breath, right? Age is catching up. Okay, so that's it, right? I hope you found this week's, well, it's not really a market analysis since I didn't really analyze any trading setups, but I think this is a good trade review to let you understand what trading is about, what trend following is about. So if you have any questions, any feedback, just feel free to leave it in the comment section below, right? I'll reply to all of your comments. Unless you're trying to trash talk me, trying to put me down, and typically I'll just ignore it. All right. So with that, wish you all good luck and good trading. Talk to you soon.